This is guide number 142 in our series about building wealth in plain language. If you want to buy your first home in the US without the fluff, this video breaks down a simple, repeatable plan you can follow. Buying a home is a big step, but it doesn't have to feel like a mystery. It's a series of practical moves you can repeat over time. Know your numbers first. Your income, debts, and credit score all play a role in what you can borrow. Write them down and be honest about what you spend each month. Your debt-to-income ratio matters a lot. Lenders look at how much of your monthly income goes toward debts. A lower number means you have room for a mortgage payment. Check your credit score and report. You want errors fixed and any negative marks addressed. A higher score usually means better loan terms. Set a clear budget for home buying. Decide the maximum monthly payment you're comfortable with, including taxes and insurance. This helps you avoid financial stress later. Plan for a down payment. A 20% down payment is traditional, but it's not the only option. Smaller downs are available with different loan programs, plus you'll pay mortgage insurance. If you can swing 20%, you'll generally avoid private mortgage insurance and save on monthly costs. But if that's not possible, explore loans designed for smaller down payments. Explore loan types early. Conventional loans are common. FHA loans help with lower down payments, and VA loans can offer advantages for eligible veterans. Each has rules about credit, down payments, and fees. Understand PMI and closing costs. If you put down less than 20%, you'll likely pay mortgage insurance monthly. Closing costs can run 2% to 5% of the loan, so plan for that money too. Get pre-approved before you start shopping. A lender will review your finances and tell you how much you can borrow. This helps you shop with real limits, not guesses. Gather documents for pre-approval. You'll need pay stubs, tax returns, bank statements, and proof of assets. Lenders also look at employment history and stability. Shop around for lenders. Talk to at least 2 or 3 banks or credit unions. Compare rates, fees, and how easy they are to work with. Build a home ownership fund. Put money aside for down payment, closing costs, and an emergency fund of 3 to 6 months of expenses. This fund protects you if income changes. Create a monthly plan for savings. Automate transfers to your savings accounts right after each payday. Small, steady saves beat big, rare efforts. Cut unnecessary costs now. If you can trim dining out, subscriptions, or big impulse purchases, you'll free up money for your future home. Small cuts add up. Strengthen your emergency fund. A cushion helps you handle repairs or job gaps without hurting your mortgage plans. It's worth protecting. Decide on your down payment strategy. If you have family money to gift, get the gift letter ready. If you're using retirement funds, know the rules and penalties. Think about the total price you want to pay. Include property taxes, homeowners insurance, and potential HOA fees in your calculation. Don't chase a price you can't sustain. Choose a target neighborhood with care. Location affects value, safety, schools, and future maintenance costs. A good location can grow your wealth over time. Find a good real estate agent. Look for someone with local knowledge, strong communication, and a track record with first-time buyers. A solid agent saves you time and stress. Learn what you want in a home. Make a simple wish list: bedrooms, yard size, layout, and proximity to work or schools. Prioritize must-haves over nice-to-haves. Use a clear buying strategy. Decide your maximum price, what you'll accept, and your plan if you're outbid. A calm plan reduces rush and regret. Get a lender pre-approval letter. It proves you're serious and ready to move fast when you find a home. It also helps with competitive offers. Start house hunting with a strict budget. Use your pre-approval number and your monthly payment target to filter homes. Don't waste time on houses outside your plan. Look for homes that are move-in ready or have straightforward repairs. A home with solid basics costs less to fix up later and keeps your budget in check. Ask about maintenance history. A home that's well cared for usually costs less in the first years. Request records for major systems like the roof, HVAC, and plumbing. Make a strong offer when you find a fit. Your offer should be clear, fair, and backed by your pre-approval. Include a professional inspection contingency. Think about the timing of your offer. If you can move quickly, you may have an edge. In competitive markets, a clean, flexible offer often wins. Expect an appraisal. The lender will check the home's value. If the appraisal comes in low, you'll need to adjust your offer or make up the difference in cash. Plan for inspections. A home inspection uncovers issues that may require negotiation or repairs. Do not skip this step, even if it costs a little more budget now. Be realistic about repairs. Prioritize needed fixes over cosmetic upgrades. Use the inspection to renegotiate the price or credit at closing if possible. Check the title and closing costs. A title search confirms ownership and reveals liens or claims. Ask your agent about anticipated title fees so you're not surprised at the end. Negotiate repair credits or price reductions. Use the inspection results to persuade the seller to cover some costs. You can also ask for a closing credit to help with fees. Lock in a mortgage rate if you're comfortable. Rate locks can protect you from small rate fluctuations during the closing period. Ask about the duration and cost of a lock. Keep reserve funds after closing. You'll want some cash left for moving, decor, and any unexpected repairs. Avoid deep draws from your account right after closing. Prepare for closing day, bring required documents, sign the necessary sheets, and verify the final numbers. Don't rush this part. Review every line. Understand the real costs at closing. You'll see closing costs like origination fees, title insurance, and recording fees. These add up, so budget ahead. Move in with a fresh plan. Set up utilities, change your address, and organize important documents. A smooth move reduces stress and helps you settle faster. Create a home maintenance routine. Schedule seasonal checks for roofs, gutters, HVAC, and appliances. Regular care protects your investment over time. Plan for property taxes and insurance adjustments. These costs can change, so monitor your bills and challenge any obvious overcharges. Budget for annual increases. Learn the 1% maintenance rule. Many homeowners spend about 1% of the home's value each year on upkeep. It's a rough guide, not a hard rule, but useful for planning. Build a simple equity plan. Every payment builds equity, especially when home prices rise and mortgage principal falls. Think of equity as your personal wealth in a house. Consider future refinances. If rates drop or your financial picture improves, a refinance can lower monthly costs or shorten the loan. Run the numbers and wait for a good opportunity. Stay aligned with your long-term goals. Homeownership should support your broader plan for retirement, savings, and investments. Don't let a house corner you into bad choices. Use real rent versus buy comparisons. In some markets, renting and investing the difference could be smarter than buying right away. Run the math for your situation. Be patient and disciplined. The first home is a big milestone, not the finish line. Use every purchase as a learning step toward bigger goals. Keep learning as you go. Real estate markets change, loan programs update, and your finances evolve. Read, ask questions, and adapt your plan. Track your progress openly. Write down your goals, your budget, and your progress toward the down payment. Public accountability helps you stay on track. If you feel overwhelmed, ask for help. A trusted financial advisor or a cooperative lender can review your plan and offer practical tweaks. You don't have to go it alone. You're building a habit, not chasing a single miracle. Small, repeatable actions compound into real wealth over time. A first home is a strong foundation, not the final destination. Remember the timeline. It's easy to rush in today and regret tomorrow. A steady pace helps you choose the right home and the right loan. Stay focused on your comfort zone. Don't stretch beyond what you can manage month to month. The goal is sustainable home ownership, not risky debt. This can be your real, practical path to buying your first home in the U.S. It respects your money, it respects your future, and it keeps things simple without pretending to be perfect. If you found value in this approach, share it with someone who's saving for their first home. If you're watching and thinking, this could be your year, tell me what's holding you back in the comments. If you enjoyed this, please like and subscribe to stay updated on guide number 143 and beyond. Your support helps me keep breaking down big topics into doable steps. What's the one change you'll start this week to move toward home ownership? Leave a comment below with your small, specific action. I read every note and respond when I can. Thanks for watching and learning with me today. Until next time, keep building with intention and stay patient with the process. Like, subscribe, and comment.